The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here, noon until 1 p.m. Eastern Time, and we've been waiting for this moment for a couple of weeks, actually. Let me explain what I'm talking about. I'm talking about in the methodology that I've been discussing here. Maybe I'll just go to this right now and I'll do it. It was Technical Friday and Friday, but we can do Technical Friday again. You remember when I was talking about the top that was made, subscribers to my opening call went short the day before the high that was made on the 23rd of April. And then what happened was, there was a retest with a fractional miss of the high, like a U-shaped pattern. I call it the drop bucket pattern. It's a double top pattern, cup formation, and it fails and takes out the left side low. But it was really up until probably the 7th of May, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to 11 sessions later, that you got this negative crossover in the 9-period exponential moving average going underneath the 14. So green goes below, changes to pink, which is a negative. When we had the low that was made right on June the 3rd, and we were fortunate enough to get a buy signal right on that day, it took all the way through, so it's 1, 2, 3, 4, 5 to 6 sessions, but what sessions? It goes all the way from the 24,700 to this high right here, to the, 26,248. I mean, that's a big move, right? And then you get a crossover to green. When I got the sell at the exact 7 points from the exact high on the 16th of July in the Dow, it took to confirm it 1, 2, 3, 4, another double top attempt, missed it. 5, 6, 7, 8, 9, 10, 11. About 11 days before you got that massive down move, and it was still only the next day, on the 2nd of August, that you got a price confirmation from the 9-period moving average crossing underneath the black line, which is the 14-period moving average. But also, my point here is that you need other techniques. So for me, this is just a confirming signal. It isn't a signal that says, hey, whoa, this is the best thing you can use. Why? Because sometimes you can use it and you get the crossover, but when it comes back again to get you out of the position, you've given up a huge chunk of the gain. So the best thing is using other techniques to actually get the inflection point that has the reversal day or the reversal moment. That's number one. Number two is, within this context, we made a lowercase h pattern, which is like that double top pattern, like the cup. This is an arch formation. Left side low that was taken out. Then we had another one without going above the high of 26,476. And I said, this is going to be a tough one to get the low, because this particular pattern, when you get it, it's usually a big move. Yep, we got that very big move. There was this huge gap up on the 5th of September, 26,836, and it goes on a little longer, and it goes all the way to the high that was made recently at 27,305. The very next day, I said to subscribers, let's try to short. We just missed the short. It didn't get the number I wanted. I said, we'll have patience. We'll wait. And then we did get the short at about 27, let me get the exact price. I think it was 27,181. Double check, 27,181 on the 20th of September. And then we had to wait. Why did I say we have to wait? I said, have patience. We don't know if this is going to work. It's not that often that you get 3 exact confirmations of a pattern in the stock market. Usually it's twice. The third time when you recognize it, that's when it does something different. No, it's done exactly the same. Look at the smash of this bar. See, just subscribe to my opening call. Every day you get a very detailed report. Let me just do this now. It can take some time. I just want to show you in the ChapmanWave methodology, what we're really looking for is from an identifiable low bar, we want to count successively higher peaks. It can go all the way from an A to a G, but it's that fourth highest peak, alphabetizing them, uppercase on the way up, lowercase on the way down. And it's that fourth highest peak, peak D. First peak is A, second is B, higher peak is C, fourth highest peak is D. And at that particular point, that's where other things can happen. Why do I say that's where other things can happen? Because, have a look. That's a peak D on the 12th of September at 27,306 in the daily chart of the Dow. That was a peak D at 27,398 on the 16th of July. That right here was a peak D, fourth highest peak on the 26,695, that high on April the 23rd. So yes, it can work, but wait a minute. You've got an E in the weekly chart. You've got an F in the monthly chart. So I'm saying D in the methodology that I've developed over the many decades, fourth highest peak is where other things can happen. It can recycle higher, but that's where in a buy signal, when it gets upgraded to a buy mode, that's where you expect at least a peak D. From peak D, you've committed, the price has committed itself to a ChapmanWave buy mode confirmation. And yes, you can go high, but that's where you got to be careful. All right, enough with that. Weekly chart, we're still waiting to see. It's just hit the 9-period moving average for the first time since it broke out about 5 weeks ago. And the next very big important support is 26,595. Days young, anything can happen. You just got to go one step at a time. And yes, we missed an all-time high to go to a leg D in the monthly chart, and that's what we've been anticipating here at the ChapmanWave methodology, using the ChapmanWave methodology. A couple of things in the notation of my work, we've got ChapmanWave inside track repellent zones. This is what I showed subscribers to my opening call. A very detailed report over the weekend. I showed this pattern here. How did it act in real life? Here is the 120-minute chart. It went to a slightly higher high, got repelled from that line, and now it's going straight down to the 200-period exponential moving average in the 120-minute chart, which is at 26,000. If I can darn well read the thing, 26,630. Okay, so that's kind of where we're headed, at least in the short term. We are about to test in the daily chart the 26,685. We've done that already, support. The next one is 26,614. What are those? I'll show you here quickly. That's ChapmanWave automated, ChapmanWave resistance and support lines. Let me see if I can just get this in the daily Dow so you can see a little bit better. HJB, put it on. Status, there it goes. Let's see what happens here. Yep, there it is. So you can see automated. Look at that resistance right there, 27,462. And what was the high that we made right here? 27,306. So once it starts to show, it makes a bit of a header look at each of these cases. That's where the price stalled on the way down. Look at that, a beautiful support level there and a support level. All right, let's see if we can do that now in the S&P, SPX. And thank you so much. We've got so many people who have used ChapmanWave method for so long that they've corrected me. Yes, the S&P did make a G. I corrected that in the on the chart. Thank you very much. I had seen it. I forgot to change it. Thank you for the reminder. I'll be right back. Dow's down at 264. Is that 84? Yep, 84. S&P's at 29.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. Yep, crude oil. Crude oil is down 69 cents at 53.38. Look at that. Now it's got support. It just took it right out, 54.18, now 52, 56 is the automated ChapmanWave notation for support there in the crude oil. The TLT, which is bonds, up very strong. It's just bouncing up against 143.60 is the automated ChapmanWave resistance levels, and 143.65 is where we are. 146.23 will be the next level on the upside. There better be a turnaround very soon, otherwise this move from bonds to into bonds from stocks is going to continue, so we're watching this one closely. So there are a couple of things I just want to look at here. Look at the VIX index, VIX.X. There it is. 19.07 is the automated ChapmanWave resistance points. Let's look at it in terms of where we are in the chart, and you'll see, wow, we're just right on the 50-period moving average in the Dow. So let's go to the VIX index here. This is in 3 time frames. I didn't finish this up. This is leg B, peak B. Okay, let me just show you what we've got here. We're always looking for those Ds. Although in the VIX index, that's the one, it's the only area where I say it doesn't have to be. Sometimes you can have huge moves. Look, there's a peak A, and I gave it all back to 50.30 back in January of 2018. So, yeah, it doesn't always have to go B, C, D in the VIX index. But this is a big move, not as big as the other day. The day is young. If it closes at the high, you know my feeling about the VIX index, when it closes at the high, that's where you got to say, has it now changed? Is there a tidal change? In other words, are the supports now going to be for higher lows and higher highs? Or does it just give it back like it's done so many times before? A very critical day. If I go back just for a moment, if I go back here to the similarity of other moves, we'll go to the Dow because that's just the easiest to do. Look at this. The move that we've got right now is going to automated support. It's just broken at the next one. It's 26,614. Not the point. Point is that you remember I was on air when I said, you know what I'm going to do? I'm going to do this, make this into a rectangle, and I'm going to call this a bad news cloud cover. Every time we've made these tops, it's taken a while before the media can kick in and say, oh, bad news. And you'd think that the media would be wanting to grab this because they love to, their job is to sell newspapers or have people tune in to their medium. And it's just great to be talking about bad news because that's when people want to listen to the news. If you said, sunny day, sunny day, sunny day, nobody's going to listen. Nobody cares. Everybody except I love sunny days. But that's not the point. If you're in the market, certainly, you're waiting to hear, is it what, bad news, bad news? What's the market doing? So this is going to be very important. And there it is, bad news cloud cover, I call it, the BNCC, new acronym, bad news cloud cover. So all I can say is this is the first confirmation that the pattern is starting to act very similarly. It's taken about a day or two longer, but that's just the way it is. Now, the high that was made on the 19th, that spike in the S&P failed by about 30 or so, 40 points in the Dow, but the S&P, it did that. And that made it a G, unusual peak G. You often get those in a cup formation at the top. And now what's interesting is that the S&P has not made trough A, B, C, D. It hasn't taken out the low of the 27th of 29.45.53. We have gone down to 29.46.91, but the day's young. We haven't seen that. All right, enough with this. Now let's do a couple of things. Get out of that. Okay. Within the context of the different indices, the QQQ tried again today to go above the 14-period moving average, the black line and the green line. It did that, and then poof, it came all the way back down. Now it's trading way underneath both those moving averages. The MACD is very negative. Stochastics are very negative at 28%. On balance, volume did test a low 2 days, 3 days ago, 2 days ago. But it looks like it's trying to hit back there again. Okay, so tomorrow, Wednesday, probably that's the day that we need to look at these trend lines for support, etc. I don't want to do it now. We're in the middle of the day. It just doesn't make sense because I don't want to repeat the same thing tomorrow when, in fact, we haven't even done what I anticipate could happen today. But I would like to go to the FANG stocks. Look, Facebook, ugly. It did go to a D. Oh, I forgot to update this. I did it somewhere, but I guess I didn't save it. All right. It went to a peak D at about 193. It reverses sharply, and it goes from 193. There's a little bit of a pullback over the last 2 weeks. It's at 175, so nearly 20 points. Sounds like a lot, but for a stock that's trading at 175, yeah, it's something to take note of. However, that plus sign, I didn't have a chance this weekend, is updated to a down arrow in the weekly chart. So Facebook is now trading in the daily and the weekly chart in sell modes. That implies there has to be something really strong to break, and until it can get back to 193, I'm going to say it's probably going to stay in a sell mode for a while. Apple had a fabulous week, has a great day today. It's at 225.81. It hit 228.22. These are big moves for Apple now. So it went to a new recovery high. I'm calling this F/C in the weekly chart because the MACD and stochastic is still very strong, and it is a C, a gray C. Yeah, because it hasn't gone over 80% in the stochastic. So gray C in the weekly chart underneath the 233.47 October 2018 all-time high. Nice action. It's had a lot of news lately, and most of it's been favorable. Amazon's having a problem here. It was up 20-something. Now it's down 3 at 1732. Just struggling. That all-time high of 2050.50 in September of last year plummeted to 1307, round number high. Screens up to the most recent I should type that in so I know what it is. 2035.80 high of the 12th. 235. No, it can't be. It must be 235. I can't remember now. 20 on 7. Was that a 12th? All right, I'll have to check that out because the memory started to fail me there. 2035.80. Yeah, it wasn't 80, not a 20. Right there. We've got it. Okay. And we've got that right, the 12th. So, yeah, from that last high, going from 2035 to Friday's low of 1709.22, trying to rally to today, and it's having a tough time because the stochastics at 15% and the MACD's not very good. So Amazon has certainly made a peak D in the last arch formation and broke to a lower low and closed underneath and it stayed underneath. This is an issue. Amazon, FANG. Netflix is trading. Let's see, one down $1.50 at 266.21. Yeah, it's in a leg B on the upside, but it's had a terrible move from the most recent high back in May of 385.99. That's a big move down. All-time high is 423. Amazon's in an H pattern. Doesn't look, I'm sorry, Netflix, it doesn't look good at all.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, let me just check out what this is. It says ISM. The GT just sent this. ISM falls to level since June 2009. S&P, S&P, can I get that right? There we go. S&P from all-time high. Why would retail want to buy this market? Yeah. So yeah, those are good points. Let me just do a couple of things. Within the context of certainly what I'm looking at, and I did spend a lot of time just going through Investors Business Daily, the top 50, etc. There are a lot of stocks that every way I looked at it, they need a rest. It doesn't mean to say that they're going to fail and crash, but just that they need a bit of a breather. They've had a spectacular move. I don't have it in front of me. I should have brought it into the office. I'll try to get it in the break. But what's really important here is that you see that the IYT, very ugly day today, down 3 at 183. It was holding in the moving average. The MACD was very negative. Stochastics way down out 80%. Should be close to flattening out or starting to attempt a rally. Instead, what it's done is it's almost filled in the gap, that huge gap on the 5th of September, where the market skyrocketed higher. 184.40 was the low. The day before, the high was 182.47. That's a big gap. Today's low so far is 183.07, where we are right now. So this is going to be very important. So I said I'd look at the IYT, which is the iShares for the transportation index. It just doesn't look all that good right now. If you look at some other things that I wanted to show you to really give you a sense of why I'm, at least shorter term, I've been negative. Look at the SMHs. Even now, they're holding pretty darn well when you think about it. They've not yet crossed negative, but this was a leader to the upside, and it had a spectacular move. And then it had a beautiful peak D at 123.56 on the week of the 26th of July. Drops very sharply down to the 107-ish area. That's a big move, 16 points. That was about 13%. And then all of a sudden, it rallies back, and it goes to 123.13. It fails. I must double check if it was that close. It just looks so impossible. 123.13. The previous high was 123.56. And then it fails. It just, I mean, so many stocks. Look at the Cintas. So let me finish this. So this says to me, just be careful, because this has been a real leader. It doesn't need more than a digestive phase, but that digestive phase could take a little more time. We've already corrected since the 12th of September. Now it's become 1st of October. So if we take out 116 in the SMHs, that's going to suggest the 14-period moving average in the weekly chart. That better hold. Otherwise, you're going to see a little bit more. The monthly chart is still outstanding. You could have time and price all the way down to 108, and I would still say to you, this is really bullish that we should be going to new highs in 2019. So let's go one step at a time. So that's the SMHs. Then I said I'd go to Cintas. Cintas, how do these charts do it? Remember, we were looking at one of those stocks was Disney, I believe. Also took months, and then it went to within pennies of the previous high. So here we are. 270.36 was the high in August. So this is August of 2019. That was the 20th, actually. Makes a peak G. Then it pulls back, rallies, and only gets to 27.24. 12 cents from that previous high, 13 cents from making a new leg up, which would have changed the whole notation, because after G, you can't get an H. You have to go back and see, has it recycled, or is this perhaps now brand new buy mode that's going to a D? Well, it's failed, and it went to a lower low, 244 round number low on the 16th of September. And then look what happens. It has a fabulous move and screams up to 270.11. So you have 12 cents off the all-time high in the rally from the August high down, and then back again to the September the 5th week of the, right on September the 5th, 270.24, plummets to a lower low. In fact, it makes a round number turn around. The MACD is good, stochastic's good, rallies, gaps up on earnings news, screams to the 2070.11, 13 cents. So you got 12 cents, and then it goes all the way back, 13 cents, it fails to make a new high. Way down, 244, all the way back to 270, and it goes to 270.11, and fails within 13 cents of making that previous high. No, it's 15 cents of the original high, but 13 cents off the last high. And there it is. I drew it in. I showed subscribers this morning. I said that we followed this so closely. Look, it's a quadruple top. Well, let's call it a triple top in the sense that it's a weekly chart, and you have to consider that if there's a week, from one week to the next, you've still got to consider that might be a peak right there, but so far the day's just begun, or the week has just begun. So isn't that interesting? And look at the monthly. The monthly is still very strong, 96% in the stochastic. MACD is at, it's very strong. So this hasn't given any signal other than today. It's very weak. And if it makes yet another failure, is it going to go below 244 for a lower low? I don't know. I'm just saying, interesting the way we've made these quadruple or triple tops, sometimes double top. Was it Disney? Let me just have a look at Disney. Disney, was it an all-time? Let me just check this out here. No, was it Costco? I don't want to go through them all. No. I must write that down. In fact, I even forgot right now to write Cintas down as this double top phenomenon. There's so many charts that have done it. And it's saying to me that you have overhead resistance now that is starting to see some kind of replication, and when I get that, I say, okay, that's a theme. Keep in mind. So I'm going to be watching it very closely. Now let's do this. I want you to go just swing around. CRM, Salesforce.com, an absolute spectacular leader. Not just a leader lately, not just a leader last year, but look at this chart. One period. Let's call it 2 periods, or even though it was just 1 month. Week of the month of February of 2016. Other than that, it's basically walked the black 14-period exponential moving average using the key green 9-period moving average as a springboard. And then it took a little time, like a little 4 months of 3 out of the 4 months closing below the 14-period moving average back in late 2016, and then skyrockets from the 75 area to 167, well, 161. That was the high that was made in October of 2018. Plummets down to 113. That is a plummet. That's 50 points. I mean, that's big. It drops by a third. Rallies to an all-time high of 167.56. And Salesforce.com, which has been just, it's in the cloud business, it's a leader, struggling, absolutely struggling. Sitting on the monthly 14-period moving average at 148, underneath the 9-period exponential moving average. Oh, this is going to be an important one. If cream starts to slide over the next 3 weeks below 136, whoa, I think we've got a problem. But we'll go one step at a time. I'll be right back. Dow's down 262.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom ChapmanWaveBasilâ.com publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Questions have come in about the comp index. Let me just do the QQQ ones. This is not the comp, this is the NDX 100. It's trading at down 90 cents at 187.91. Not bad action, but it is making, see, if I look at this as a cup formation, although this is the one that really looks more like my rectangle, where I talk about I grab the upper price, lower price, and I draw a big rectangle, and I say this is one of those patterns where it could be if it succeeds in not taking out the low within a couple of bars, it could start a move up that goes peak A, peak B, C, and D, going towards right on or just above the previous left side high that was peak D at 195.55 on 26th of July. And then you've got to be careful because it could pull back, could even pull back to the middle of the range. Kind of that's what it's done. It's gone to 186.21. No, I think that was lower. Let me just double check. 185.75. Change that. 180 edit. 185.75. Yeah. So what we are looking at here is it's in a range that says if there is a push to the 192.25 into the 192s, that's going to be good action. You could start to make that cup and handle formation, very deep handle, but you can at least attempt to get towards the 193 area. But if there is in fact only another rally attempt and even a lower low, you're going to take out that 185.75. The moment you do that, you get to 184.65-ish. That 182.52 200 period exponential moving average will look like it wants to be tested. So I'm just going one step at a time. On the upside, as I say, the 192.60, even 193s really says, we're not down, we still got some more residual strength. Not only that, you've got this trend line support, which we're on right now. You've got the 14-period moving average support. Just got to watch it. Got to watch it closely. Anything can happen. Am I seeing my IMs? Oh, wait a minute. Oh, it got covered when I did that chart. I'm sorry, I can't see the IM right now. Are you taking calls? Oh, I've got Scott on the line. Scott, you're waiting patiently. Here we go. Scott in Safety Harbor, how are you? Is Scott there? Did he just say, I've had enough just waiting for this guy yakety yak? Sorry, Scott, you were obliterated by my one of my charts that I put up on that particular screen. All right, well, if Scott's there, he can call. Just call me back or just yell. Say, I'm here. but I'll talk about it because you were in X, which is United States Steel. You took your profits. I don't know if you got back in, but now it's in a leg C, making a cup formation. What's really important, I didn't hear what he said, but I just saw briefly he said something about CEO of U.S. Steel. I can't remember, favorable, I don't know what he was saying, but favorable period, I think it was. So he's looking favorably at his own stock. But you know, these guys tend to talk up their stock. So I'm going to say, let's forget about what the CEO said. What does the CEO know anyway? No, just joking. I do respect the fact that having to run a company like that is amazing. But what I will say is that I'd like to just do the chart. I don't think the consolidation in U.S. Steel is done. But what it's doing right now tells me keep an eye on this, because this is going to be a stock that has a fantastic move. I'm hoping it's this year in 2019. It's already October, November. We've got 3 months. But I'm hoping that within the next 4 to 5 months, we're looking at U.S. Steel, that all the news events kind of put aside, and then it suddenly says, you know what? The economy is not as bad as everybody's talking about. U.S. Steel is doing very nicely, and I'm done with that whole area of the below the teens. I want to be in the teens. I don't want to be in the 11s and 10s. I want to be skyrocketing up right into the 14.5, 15.5 area. Wow, if it can do that one more time, I think that's all it needs is one more time. I do believe that U.S. Steel could somehow or other struggle to do that. But once it does it, I think it's going to be clear sailing. So let's make it real clear. Looking out, yes, you've got to be prepared that you could test the 11 and 10 area one more time. You can even go down to the 9s. But I think we're in the basing area for U.S. Steel, and it's starting to look more and more attractive. And I'm beginning to think I should get from my subscriber. Look at this. Just touch the 14-period moving average over the 9-period moving average in the weekly chart. I'm beginning to think that I must get from my subscribers a way of playing U.S. Steel that says, you know what, you can do X, and then you don't look at X for 3 months, 4 months, no matter what it does. It might impact your portfolio negatively for a while, but at some point, it's going to be a real winner. I just don't know if it's right now, because it's already gotten to a C. It's kind of, no, the action lately has been very good. It just refused gap down, and it's filled the gap today, more than filled the gap. I like that. It's improving. Let's put it that way. But overall market says to me, just have patience. I was interviewed on Friday. It was played on Saturday. And basically I said, if you've got favorite stocks, just make a list of them. Make it prices that you'd like to get in. Don't get carried away. Make them low, much lower than where they are now. And just wait. Have patience. I think at some point that's going to work for you. And what you really want to do is to try and listen. I know it's almost impossible. Try and listen to the news as little as possible over the next couple of months. And I think you will be richly rewarded. If not richly rewarded, emotionally rewarded. Something like that. But you see this Dow ChapmanWave inside track repellent zone right on the short term, 12.98 needs to be hit. So I didn't get a call back from Scott. I'm sorry about that. I just took too long. I'm sorry. I planned it so that I could have the my producer Al put my questionnaire right there. But I am going to say, Al, if you could put it in the den, I always see it in the den. So maybe that's an even better way, because I just have to hit one little key and then I've suddenly covered up your. I try not to, but just for the moment I've got limited screen space. I shouldn't say that when I've got 5 screens on, but I do have limited screen space. Yeah, so Jay in the Den says, Ruby, I'm having Scott buy my lottery tickets from now on. Nice comment. Okay, now listen, so I just wanted to say, Scott, I'm not sure what your position is right now. I suspect that if you went back in, you've already taken some of those gains. And that's just my suspicion. We'll see what happens. What I am going to do is this. You see, how can I do it? So that, I'll just go to this. I wanted to show you something. This is what I show my subscribers every week to my opening call. So there. Just wanted to show this, and then in the final segment, I'll just wrap up where we are for my opening call subscribers, what we're still doing. Look, Here's the 30-year T-bond yield. White is the TYX. It made a trough E and ran up to a peak A, and now it's in the middle of the trading zone, but way off the 34.55, 3.55 November 2018 high. And I went all the way down. I didn't type in what it was at the bottom. I should have. And the low was 19.05, 1.905. Can you believe it? That is incredible in yields. So now it's trading in the range, right? And the brown is the 10-year and the cyan is the 5-year, and they get hugging one another close together. Watching that. See how wood, the iShares, it went above the trend line resistance, so now it's going to test it again. And you see that the home bull.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So just before I do this other stuff, let me say Downtown 261. GoPro, I was asked about GoPro, and we're looking at a situation where there's a stock that goes public at about 41 back in June of 2014, screams to 98.47. It really sounds like an amazing product, and then just takes a dive, just a one-to-one downside move, A to B, rallies up, and then C to D is even greater, and then it slides all the way down to the pretty much nothing area. The low was somewhere around, was that? I don't know if that was the low. Back in April of 2018, it was trading at 442. I would say 98 to $4. That's a bit of a decline. Okay. Most importantly, the question is what to do now. It's in leg E. It went above the 200-period moving average of 540. It's right at 540 right now. It went to 579, and just a few weeks ago, beginning of September, you're looking at $3 and something like 60 cents. Big move. Be ready to have it come down. Now, I never quite understood this, like in the Netflix category for me. Never quite understood it. I didn't understand quite why it went so high. Didn't expect why it went so low. I think it's a very important project. I don't know much about it other than to say, hey, putting it on your helmet or something like that. Everybody's taping everything these days or recording. So I like the stock. I like the way it's acted. I just say that if you wanted to get long now, I would wait. I'd wait for, it's at 542. I'd wait for the 492 to I'd have to put it here, 475 area. Just let it come down a little bit, and then let's look at it again because the technicals have started to improve. I don't know if it's in play, but it's had a really good move. It just needs a breather. Good eye looking at this one. I just give it time. I'll miss it if it doesn't drop enough. I'll have to do it again in a different way. But I do think it needs to pull back a little bit. Certainly if it goes to 6 and something else is going, or maybe it's a takeover, I don't know. All right, where are we? We're out of our IAI. I put the stop in at break even this time. Usually we take profits. This one was just break even. This is the broker dealer. It's plunging because of I spoke about this over the weekend with my subscribers. I mean, I showed them, I said, this low rate business is a problem. One day they're going to start charging for it, and that's when they really pick up. Down 232. Watch it closely. We've built up a nice cash position, and we do have our shorts. So be careful right here. Have a great day. See you tomorrow.